How do you make a shitload of money in a bear market? That's exactly what we're going to talk about today, folks. As someone who went through the 2008 stock market crash, which was devastating, and I witnessed it firsthand, it was much more clear to me to see when Bitcoin in 2017 was about to make a massive meltdown. I've had the experience of trading for almost 20 years, and I've witnessed firsthand two huge bear markets and exactly how to navigate those. Now you're probably wondering, what should I do next in this market condition? That's what we're going to talk about today. Is I'm going to give you a bear market survival toolkit. So you're not only going to learn how to navigate and survive these certain conditions, but you're also going to set yourself up to thrive, because there's going to be a lot of people who lose everything in these market conditions, and only a small amount of people are going to make a shitload of money. And that's what we're trying to do, is come out on top and make a shitload of money. So that's what we're going to talk about today. The bear market survival toolkit. If you're looking for the next 100x crypto project to buy into, you have come to the right place. My name is Cameron Foose, and I have been a professional day trader for nearly 20 years. I deposited $20,000 into an account, and in just over a year, it's now worth nearly $2 million. On this channel, I'm going to present to you the best altcoins to buy, such as getting into Mana before it ripped 595%, getting into Dogecoin before it ran 15,000%. So if you want to hear about all the best trade opportunities first, hit that subscribe button, and more importantly, turn on the notifications bell so you can get these time-sensitive trade ideas immediately when my new videos go live. All right, guys, welcome back to the channel. It's been a little bit of a hiatus for Cam Foose on the YouTubes, because a lot of times I've just been kind of sitting back and watching this madness unfold in the market. Now, what we're looking at right now in Bitcoin is we are in a clear bear trend when we look at the weekly chart. But let's just rewind back to 2008, my first big bear market that I was a part of, and some of the things that I learned from that and what I wish I would have done differently. If we go back to 2008, this was me starting trading in 2005. So obviously from my starting point in trading for the next 3 years, we were just basically on a massive bull run. And this is where people kind of get mixed up, and that's all they experience is bull runs, and they have no idea what's coming when this massive disaster is about to happen to them. And this happens time and time again. You know, how long they or often they happen, maybe every 10 to 20 years, there is a massive bear run. And this is just part of market cycles, and something that a lot of people don't want to understand, don't want to accept, because they haven't experienced it yet. Because a lot of people either haven't had enough market exposure or time to witness something like that, so they don't want to believe it, and they don't even know about it until it actually happens to them. And that's what happened to me in 2005. And then finally in 2008, I experienced the massive meltdown where banks were, going bust. Everyone lost everything. Everyone went from stockbroker to restaurant waiter or waitress, myself included. I eventually went back and started bartending again in the midst of this madness as well, after I started trading, and basically went full time in 2007, only to start bartending again part-time in 2008 in this meltdown. So one of the things that I wish I would have done differently in this mess is, let's just take a look at these steps here. Step one is get rid of your bull market strategies when the trend flips. All the strategies that I was using in this bull market, all of a sudden this new disastrous event and this fear started coming in, and I didn't have any other strategies other than those bull market strategies. And I kept trying to use these things and also learn new things as this was happening, which just didn't work. The bull market strategies clearly weren't working anymore. And as I was trying to learn this new stuff, the Dow Jones was flipping 1,000 points up and 1,000 points down in the same day. Trying to navigate that is just pure chaos. And the more you expose yourself to chaos, the more mistakes you're gonna make, and the more emotional you get. And the more emotional you get, the harder it is to make rational decisions. And then you lose even more money. And the farther down you are in your account, in your drawdown, and the amount of big losses you sustain, it's harder to recover that. The biggest mistake that I did was just continually trying to trade. And then I would lose money, and then I would revenge trade to try to make that money back in a shitty environment. This is something that people don't understand, is you're gonna lose a lot of money trying to trade in these chaotic moments, such as we're experiencing now with the Ukraine war. Biden's coming out with his executive orders. We don't really know what's happening. Every other day is some new catastrophic event that could flip the tide, either bull or bear, in a huge move, which is gonna make people lose a lot of money. So my biggest tip right now for this is, when you identify a trend flip and we are now in a short-term bear trend, get rid of all your crypto and also get rid of all the strategies that you were once using, because you have to understand market environments change, markets move in cycles, and you can't use the same strategy year round. Whether you have one strategy that's just buying dips and buying breakouts, that works only maybe 6 months out of the year. The rest of the time, it's not going to work. So you might have to take 6 months out of the year off and do nothing, which is a much better strategy than losing for 6 months in a row, then trying to make it all back. Brief interruption from today's sponsor, guys, which is none other than dydx.exchange. Now, with all this stuff going on in Canada, in Russia, sometimes it could be a little scary to hold your money on a centralized exchange. But with DYDX, this is a non-custodial futures perpetual trading exchange where all you do is you go in and open an account, and rather than giving them all your information, you simply just click connect wallet and a pop-up shows up that will allow you to connect your MetaMask, Trust Wallet, Wallet Connect, Ledger, Coinbase Wallet, a bunch of different wallets that can then actually give you access to open up a smart contract for every trade that you make when you're actually trading, as opposed to giving your money to a centralized exchange, which at any point in time, they could potentially lock you down and say, no, we're not letting you withdraw or deposit any more money based on whatever factor. With DYDX, this is completely in your control. This is known as non-custodial. They also have a bunch of different coins that you can trade on their futures exchange. Just an example of the platform. So overall, super cool platform. And also the fact that you are in full control of your money, basically in a DeFi wallet. If we look at what else is going on here, they have a bunch of really cool things with these trading leagues based on whatever your account balance is that you're holding of DYDX, as well as your minimum equity in your account. In the top tier in the latest trading league, first place is going to win $33,000. In addition to that, you're also going to win a Hedgie, which is their new NFT drop that they just released. This is super cute. Just looking at these little hedgies. Maybe they thought about it as a hedgie, as a hedge fund or a hedge trader. I don't know. But regardless, it's super cool. But anyways, DYDX Exchange, a super cool perpetual futures platform, completely off of any centralized exchange, non-custodial, completely in your control. Okay, so that's one of the biggest things, is identifying trend flips and getting out of the market, and or using a different strategy to actually make money. Different ways to identify is one, the trend X indicator that you can see here on the weekly chart. This is basically just a short-term exponential moving average range. You can see as soon as it flipped over in the Dow Jones, that was now time to get rid of your bull market strategies because they're no longer going to work. If we look at it going up, back in the beginning of 2009, I made a shitload of money. This was like money in the bank. Every fucking trade was great after that trend flipped on the weekly chart. Okay. And now we look at the market. Ever since then, we really have not seen a bear market since 2008. And there is a lot of shit going on with inflation, the Fed printing more money they have ever fucking printed in our fucking lifetime. We could be on the potential collapse of the market. As I tweeted back at like 36, I said, who's ready for a bear market, stock market crash? Because we are on the verge of doing it. And we are now down from 35.5 to about 32.2. Obviously, we had the scare of coronavirus, but we quickly rebounded. We can't really consider that a bear market because we reversed so quick. This one lasted in the Dow Jones roughly a year and a half, right? Before everything actually collapsed. But it was really just this kind of move right here. This first half of it was kind of like, okay, things are changing, but we don't really know what's happening. Then shit just hit the fan. And this was like, okay, everyone lost their fucking ass. Now it's time to take a break from the market. We don't know what's happening. But there was a time when the charts formed back up, which I'll talk about later. And it was time just to go balls to the wall, put your foot on the gas. And that's exactly what I did, and quickly turned about $5,000 into over $100,000 in 9 months through that market cycle right up there. And so we haven't seen a bear market in stocks since then. It's very possible that we could be coming into a multi-month, multi-year bear market and a pullback. Ideally, I think we're going to be pulling back to about 30K on the Dow Jones US 30. It's hard to say what's going to happen. But when we look at the Bitcoin chart about identifying trend reversals, the biggest one for me, and ever since I went full-time crypto from being in the stock market for almost 20 years, then joining crypto in about 2019, 2020, I started trading crypto right about here, right before this massive bull run. Okay, so I made a shitload of money, like 20K to as high as 1.7, 1.8 million. Obviously, I've lost a little bit along the way through these massive dips. Now, I don't know what it is, maybe 1.5 at the moment, but I've taken a lot of step backs and breaks through these massive dips as we've seen in the crypto market. But ever since joining crypto, I've called every major top that we've seen. I called this top here, I called this top here, and I called this top here on the markets where I tweeted these out in real time as well as to my group saying, hey, I'm getting out. This is this fucking on the verge of a massive collapse. And it's happened every time we saw a massive dip, massive dip, massive dip. And now we're re-nearing this state where we could see another massive dip to 30K or even lower on Bitcoin. But if we look at the 50-day moving average, when this thing was on a massive trend here, right? Testing the 50, then we broke here and then finally broke down here. That was a signal here. Then we saw that again here, 50-day moving average breakdown, and then a massive pullback here. In addition to that, the actual bull trap that happened when we failed to break out over these highs 2-3 times in a row and then started closing back below, as well as looking at the daily chart. The short-term trend indicator was also flipped as soon as that broke down as well. I also called this out multiple times on Twitter saying we got a bull trap in place, 50-day moving average breakdown. We're on the verge of seeing a massive pullback here as well. And that's exactly what happened. If you haven't watched my video where I talk about my 20K to 1.7 million, I talk about the entire historical, not every trade, but all the trades that I made, my huge wins and huge losses. Again, going back through understanding these market shifts, and while these shifts happen, continually sometimes trying to, buy the dip here or use bull market strategies, and it just doesn't fucking work. At about 6 months out of the year, I can't use these strategies because they just don't fucking work. You have to have a confirmed trend reversal where we're back in a bull market where those kind of strategies of buying breakouts and buying the dips of a bull trend, that's only going to work about half the year, because the rest of the time you're in a market cycle that's not in favor of that. And that's where most people slip up, is they make money when things go up and then they lose it all on the way back down. And by the time things stabilize, they're so mentally damaged and have lost so much money, they don't have the mental capacity to actually take advantage of these next moves up. So if we look at Bitcoin all the way back to the 2017, 2018 bear market, we saw the massive move up. Then the trend shifted here. Once these trend indicators reverse, we can actually go to a daily chart here. We can see bull market strategies are thriving. As soon as this flipped at about 18K, topped out near 20K, this was the time, as well as the 50-day moving average didn't break until here at about 15. This was when the bull market strategies no longer worked and everybody lost money. And now we have this massive resistance, or support, I should say, forming up at about 6K. And right now we're seeing something similar with Bitcoin, but we're seeing it at 30K. And once this level broke down on Bitcoin, we saw an additional 47% decline from that major horizontal support level breaking down. And this is what I fear that could be happening and forming up on Bitcoin at 30K. If we go flash forward to the current market situation, we have this big bear trend forming up. Weekly chart is obviously clearly in a bearish trend, so bullish buying strategies are not going to be working right now. We also have this head and shoulders pattern forming up, left shoulder, peak, right shoulder. Then we have the neckline here. And also we are now trending bearishly below the short-term indicator, which is the trend X indicator here, of which is maybe coming to a near place towards you, as it's my custom indicator. Okay, it's not available yet, but maybe someday soon. But we also have this bearish trend and a descending triangle that was also formed at 6,000 back in 2018 with this massive support level at 30K. And so the next level of support, if that breaks down, is between 10 and 20,000 on Bitcoin. So if we continually form up here and also this actual head and shoulders breaks down, we could definitely potentially see 20 to 10K, 12K on Bitcoin. And this is basically what people are calling out as potential. If that happens, is 20 to 10K is on the table, because that's what the charts are suggesting. That's what we saw historically happen as well in Bitcoin in 2017, 2018. So if this happens, how exactly do you trade that? And how exactly do you make money? Do you just short? Do you buy and hodl? The easiest thing to do is just fucking walk away, okay? And do nothing until the charts are back. Wait till safety is back in the market. Wait until we have a comfortable trend. Wait for all the bullshit to get out. Wait for the war to be fucking over. Wait for this inflation crisis to be done, and wait for the charts to tell you that the trend is flipped in our favor. We don't have all these catastrophic events that are pending that could collapse the entire fucking market. Wait for all that to be done. That would be ideally the safest move. So step 2, guys, of this potential market that we're currently in. And again, right now, this could be the bottom right here, and we fucking just rip up to the top. I don't fucking know, okay? All I'm saying is preparing for this is better than not preparing for it. At least entertain the idea of that potentially happening, okay? Because it's very possible. So step 2 is put a large position of your portfolio in interest-bearing accounts. Now for me, my number one place that I do that with is Incur Protocol, which is on the Terra Luna ecosystem. You basically just stake UST and you earn a shitload of money every day. 19%. This is the highest, safest stable coin that you can be staking along the way. It's app.incurprotocol.earn. I have almost $1 million in here at the moment. It's simple as going to the dashboard, clicking the earn button, transferring UST into your Terra Station wallet, and then clicking the deposit. I'm earning $518 per day, like fucking clockwork. That's $3,600 per week, $15,000 per month, $189,000 per year on the Incur Protocol. Right now, they have about enough reserves to last for another year. So who knows how long this is going to last, but if we go through a bear market for another year, I would definitely like to be taking advantage of a 19% APY on a big position of my money in crypto without being exposed to markets. Brief interruption from today's sponsor, which is Finance. Do you know that 31% of stablecoins are just chilling in people's bank accounts or crypto accounts at all times, doing absolutely nothing? But with Finance, you can earn upwards of 14.47% on your USDT. This is the highest APY I've seen on USDT. A lot of places you might see 12%, but I've never seen almost 15% on USDT, which is the most held stablecoin across the board. So if it's just chilling, such as in a bear market, and you're doing nothing with it, you can get a Waves wallet and then connect it to Finance and then earn 14.5% APY on your actual stablecoin. And then you can also borrow and earn APR on your borrowing or supplying of it. That is Finance, of which you can also now insure your supplies or deposits that you make on this platform to ensure that you don't get hacked or lose your money if for some reason something went wrong. So it's important that if you are using DeFi protocols, you can get insurance on it. And that's what they're also providing here at Finance, the highest USDT staking supply I have ever seen across the board. Go check it out, Finance. There's also going to be a link below. As you can see here, if you go to science.flipsidecrypto.com/Incur earnings, you can connect to your UST Terra Station wallet here, and it'll track exactly how much money you're making for this. You can see I've made $25,000 in interest. You can see like clockwork every day, just straight up. This is the best bear market strategy there is. It looks like a bull market to me because I'm just fucking making bank. So that feels good. The other thing is, if you are going to hodl in your positions, you better be hodling coins that you can earn interest on. Like if you're on Kraken, there was Polkadot, which was a good one that had good interest rates. Vald.com is another one. There's gonna be an affiliate link below, which I do get a small kickback, but you can see on stable coins, you can earn 12.68% on USDT. I believe USDC is also another one. XRP for the XRP gang. I also did a video about this. You can earn 6.7% on your hodl. Bitcoin and Ethereum, also 6.7%. Ones like Solana are only 1%. So Solana doesn't have a very good interest rate on here, but Matic, I'm also very bullish on Matic long-term, 12.68% staked on your crypto. And what's cool about Vault is you don't actually have to stake it. You can either just hold it in your wallet and you're automatically going to earn interest, or you can do fixed periods of like 30 days at a time and you'll earn actually more interest on that. If you're going to hodl, you better be fucking hodling coins in a bear market that you can actually stake and earn interest on. Another place you can go to is stakingrewards.com. It'll show you where you can earn the highest interest rates on a lot of the top coins. You can see the number one staked coin is Terra Luna, which is, for me, they're saying 19.42%. That's actually, they're saying staking UST on Incur for 19.42%. You can also earn 6.16% on Solana, 4.5% on Cardano, but they're going to tell you exactly which platforms you can actually earn those on, right? They say here, you can only earn in the last 24 hours, it's 4.83% on Polygon Matic. But if you go to Vault, you can actually earn 12.68. So this might just be the average earnings of across the board for it. But Staking Rewards is a cool website where you can go and check out all the different things. Lido.fi is a place if you want to stake your sol for 5.8%, whereas Vault is only 1%. So overall, I think it's important in bear markets too. You better be, if you're going to hold anything that has volatility attached to it, like an actual crypto asset such as Bitcoin or anything else, you better be staking where you're actually earning interest on it while things are going down. So you're actually building your position along the way, or stake a stable stablecoins and sit on the sideline. You can earn 12.68% on your USDC, 12.68%, or go to Incur and earn 19.28% while this still lasts on your UST. I'm fucking earning $518 per day on about $982,000 in crypto. Step 3, guys, is if you are going to trade this market and all this crazy market volatility in the middle of the fucking war, downsize your positions vastly or sideline until the market is back in your favor. Again, this could last 3 to 6 months or it could last a year or two, right? We don't know how long this is going to last. As I said, in the stock market crash of 2008, it really only felt like it was about 4 months where I was just kind of out of the game. And then all of a sudden, like March of 2009, patterns just started forming up. Everything was a penny stock. Everything was under. Bank of America was like $1, and there was so much money to be made. Problem is, if you lost all your money in the downturn and had no mental capacity to shift and actually take advantage of this opportunity, you missed it. So it's important that you don't fuck everything up while everything's dropping and have the patience to wait for the right chart patterns to set up before you get back in. Step 4 is if you are going to buy in this market, only buy bear traps deep into support and demand zones. This takes a lot of fucking patience. You don't, run around buying into breakouts and chasing the moves to the upside. That's not how you're going to find success in this. You want to wait for things to break down, such as me buying the dip just the other day on Bitcoin. I was hoping to see it come into this support level, demand zone. It barely got in there, but I did buy the dip, okay? But I'm not chasing these moves to the upside. I'm waiting for things to dip into my zones, right? I'm not trying to predict what's gonna happen. Okay, things are going. A lot of people, all they're doing is now buying Bitcoin at 41.6, which is stupid. We don't know if it's gonna peak out right here. We don't know what's gonna happen. What you wanna do is wait patiently for things to break down. We wanna look for places where people are gonna be placing their stops, okay? And a bear trap or a bull trap is simply a bunch of people just getting stopped out, and then the market actually flips off that. If we look at Bitcoin, this is on my Bybit account when I was buying the dip on Bitcoin. I didn't, try to chase any of these spikes up. What I was waiting for was stops to be set and people getting stopped out in new low breakdowns near a support level. So as you can see, there was this low right here. I wasn't trying to chase any breakouts because you're likely going to get clobbered. And that's why people try to buy the dip when they think the trend is finally reversed and then they get smashed. I waited for new lows to break down and then I bought in on Bitcoin right here at about 37.2. And then now we're at what, 41.7. So a nice reversal on Bitcoin of about 12-15% from that dip buy. Rather than trying to chase this, I waited for new lows to break down and stops to be broken out because that's when things reverse. You never see just a slow, gradual reverse. It's people get fucking stopped out, creates a bear trap, and then that's when things skyrocket. Similar to the upside, we were actually short Bitcoin from up here as it was reaching into this resistance zone up here. I got short, not just, getting short here, and here. I waited for new highs to fail and then get short. If we look at the screenshot that I took here on Bitcoin, you can see I was short from about 44.7. I was waiting for this high to be broken. Basically, first initially saw this high right here on Bitcoin on this huge 15% day. I was like, okay, this is like getting super toppy. We're back up at this resistance zone. I'm not going to get short right now. I'm going to wait for new highs to be made and then fake a bunch of people out. So I got short right here after we spiked over that recent high. I was still short, and then we broke out again right over this level, and I got re-short again to the point where my average was 44.7. Okay, so I made the perfect entry, not by chasing it down here, like, it's finally reversed. Now I'm going to get in. I waited for new highs to be formed and then fail in a bull trap, and then got it short after people got stopped out. And a bunch of shorts got stopped out here and probably freaked out like, motherfucker, I got stopped at the top, and then it reversed. So you don't short before resistance. You short after it spikes over and then fails to hold. So buy bear traps, short bull traps is basically the moral of this story for these positions. So that was basically the step 5 that I went over, was basically shorting tops, not gradually think they're going to roll over, wait for the big spikes, wait for it looks like people are getting stopped out, and then failing. That's what you want to look for tops, and it's also what you want to look for bottoms. Step 6, guys, is when the trends have officially flipped, the charts will have formed back up and revival patterns will start showing themselves. This is when you can confidently start going balls deep and the potential bull market is ahead of us. So what's a revival pattern? It's part of the Krypton strategy that I teach at my website, iknkfx.com. It's also part of a strategy that I teach in the stock market for many, many years until I went balls deep full-time in crypto about a year and a half ago. And essentially, this is how it looks. You see a massive run up in stocks, crypto, whatever asset. That's a bull market. Everything crashes. Everyone loses all their fucking money. Everyone flips out, has no idea what's going on until things finally stabilize. And you typically see one big spike up, and then you see another spike up, and then you consolidate to the point where you now have this pattern, which is what I call a revival, because there was a reversal in a bear market. The lead-in trend is a bear market, BM, followed by a spike. We now have a horizontal resistance, a new trend forming, and now it's reviving itself after a bear market. And as soon as this breaks out, we are going to see a massive fucking short squeeze and new buyers coming in, and we're going to see huge fucking gains across the board. And this has happened in all assets of all markets that I've seen across the board. Let's just rewind back to the bear market of Bitcoin in 2018. Let's pull up the weekly chart here. And this is exactly what happened in the bear market of 2018. We saw a huge explosion of a bull market on Bitcoin, trend reverse. Everyone lost a bunch of fucking money. People kept buying the dip and losing everything. They were buying breakouts, failing, buying breakouts, failing. Everyone lost a shitload of money before finally we had this descending trend triangle that broke down in an additional 50% drop, which is what I think could happen in today's market with crypto and Bitcoin, where if we break 30K, we could drop to 10 to 20K. And that's where we're going to see a potential probably revival pattern form up. And if we look closer at exactly what happened here on Bitcoin, we can see the neckline forming along with the ascending trend forming. And now, my friends, this is what we call a revival pattern on Bitcoin. And when you saw this pattern on Bitcoin, this was happening across the board on all the altcoins, all the small caps, whatever you want to call them, on all the coins. And as soon as that revival pattern broke out, we saw another massive move on Bitcoin to the upside, about 220%. So this is what you want to look for at the end of a bear market. You want to look for a revival pattern across the board on Bitcoin. And when that happens, you're going to see a lot of the similar patterns that are going to form up across all the altcoins. And that's when you want to be confident and go balls deep, fucking go on margin, balls to the wall, get a loan from your dad and your mom and your grandma. Just kidding. But you know, it could be pretty profitable. This is when I want to be confident in going balls deep in the market, possibly do some margin plays and just rip it to the upside. But before that happens, guys, trying to trade this chaos, it's a washer machine. You don't know what's going to happen. You're going to lose a lot of money. You're going to burn up a lot of cash. And by the time this fucking happens, the amount of capital that you have lost in your account, all you're going to be doing now on this run is making back your losses. You're not going to make any fucking money. You're going to try to make up for losses and go back to where you were fucking 3 years ago to be even. So the entire goal of this is to not lose money in these massive downturns so that when the right situation forms up again, you're ready to make money and then continue on your upward trajectory in your market, in your account, rather than trying to make up for a bunch of dumb losses that you made when markets were bearish and you kept trying to use bull market strategies. But anyways, guys, that's basically kind of the step-by-step process of how you should manage a potential bear market. Because we look at the weekly chart right now, we are clearly in a bear market on Bitcoin. Now, this could definitely potentially flip. Okay, we don't know. This could be the potential bottom and we just go fucking rip up to 100K. But if we continue in a bear mode, stop using bull market strategies and start conserving capital and wait for a potential huge massive drop and liquidation event in the markets, because that could definitely fucking happen. The US 30 is on the verge of a massive meltdown, as we can see here as well. Trend is clearly just flipping the 50-day moving average. We are just starting a weekly chart bearish trend on the stock market as well. And this could definitely see a massive downturn. That's my 6-step process to survive the bear market and hopefully thrive. And once we see those revival patterns form up again, that's when you want to go balls deep, go fucking margin. I'm just kidding. Don't use margin, but maybe you want to and you might make some fucking bank. But hard to say what's going to happen, guys. All I know is I've been doing this for 20 years, and people who go and make stupid decisions and try to get rich quick never do. And if they do, they don't stay rich quick long. They eventually use that same fucking dumb, crazy strategy over and over again to the point where they eventually just lose it fucking all. So be safe out there, conserve capital, and just try to be smart. Anyways, that's a wrap, guys. See you in the next one.